Before the opening bell, U.S. indices, they closed mixed on Wednesday with the Dow Jones and the S&P 500 closing up, while the Nasdaq closed down. Consumer durables and apparel, capital goods, and real estate sectors all the best performers, while food and staples retailing, media and semiconductor equipment, those sectors, the worst performers on the day. While on the economic front, the MBA mortgage applications, they dropped 29.4% for the week ended March 20th, compared to being down 8.4% the previous week. Durable goods orders, they rose 1.2% from a revised 0.1% in the January final read. This all as 72% of S&P 500 constituents traded higher yesterday. Now, after the markets closed, the U.S. Senate passing unanimously the $2 trillion coronavirus relief bill, which will then be voted by the House of Representatives on Friday. Micron Technology disclosing second quarter adjusted EPS down to 45 cents from $1.71 a year ago on revenue down to $4.8 billion. And Ford saw its credit rating downgraded to BB+, a junk rating from BBB- at S&P Global Ratings with an outlook of negative. Now, there's no major expectations due out today, while on the economic docket before the opening bell, you have continuing and initial jobless claims figures. You also have the fourth quarter GDP price index as well as PCE prices for the fourth quarter. Meanwhile, there's also the February goods trade balance, and we also have wholesale inventories for the month of February. Then a slight bit after the bell, we also have the 3/20 EIA natural gas stockpiles. Meanwhile, taking a look at the markets, the S&P 500, that's where we begin. That sees its intraday support at 23.85. The Nasdaq sees its intraday support at 72.95, while the Dow Jones, that sees the bias remain bullish, and that's also in focus. The relative strength index mixed and calling for caution. Long positions above 20,280 are favored with targets at 21,350 and 21,880 in extension.